mortgage term that you know as a home buyer.
Right, so when you're buying a home, these words we throw around a lot. We talk to your lender, but it's really lender terms, but you need to understand what these things mean. So we're just going to run through some basic definitions for you so you have a really clear understanding on these, what they are, right?
Exactly.
So we'll do this with the first one.
The first one is really impacting the credit on the interest rate. No?
So what is that? Credit score. Tell us about that.
The credit score. And the lenders, you're usually basically looking at the 3 credit bureaus, Experian, Equifax, and what is the third one?
TransUnion?
TransUnion. And make sure that you basically have eligibility for the mortgage loan.
Okay, the second one is called basis points. Now, basis points is a small unit of measure in finance to describe interest rates on fees. Your credit score is going to affect the number of basis points that your loan needs in order to get the loan. I'm going to give you some general examples. These basis points change every day, so don't take what I'm telling you as a real estate agent as like the God's awful truth, because again, I am not a lender and I am not going the day by day. So I'm just going to give you generalities, right? So if your credit is over 640, you're probably not even worried about basis points because you're going to have 0 basis points. If your credit's like 620, you're maybe going to get 500 basis points, which is like going to be a 0.5%. So let's
500?
So say you're getting $300,000 loan, it's going to be about $1,500.
$1,500.
Right? If you're at the 600 level and these basis points are something that has to be added to the loan, again, I'm giving general examples. These are not final, and I am not a lender, but I'm just giving what I see on the other end of it. So say they say the next one is what basically equals 1 point, so 1,000 basis points, I think it was. And then that's if your credit's like 600. Again, these are generalities. So if you're looking at a $300,000 house, that basis fee they're going to charge you for the loan is about $3,000. Now, if your credit's 580 and you're dealing with an FHA loan, totally fine. It's going to be about 1,500 basis points, which is going to translate roughly to 1.5%.
Which is
so
$4,500.
again, right. So for $300,000, it would be $4,500. There are ways to go. If you know that this is coming for your loan, don't freak out that I'm going to have to come up with $4,500 or $3,000 or even $1,500. There are ways to deal with this, but understand what they are right now.
Exactly. Now, we wanted to talk about the credit and mortgage fee.
Absolutely.
No? Basically, your credit score impact various kind of fees that associated with the mortgage and what they are.
Oh, the first one you're doing. I told you before we did the video.
Okay. The first thing that we wanted to talk about is really origination fee.
I can't say that word. I hate it. So what is that?
Before doing this...
No, tell us what it is.
Basically, origination fee is the amount of the lender charged to process the mortgage application. Okay. And it varies from company to company.
Now, before we get into more terms, let's do our introduction. So let's
hit it.
Hi, it's Alan Victoria. Welcome to our channel and podcast.
And if this is your first time in our podcast and YouTube channel, make sure you subscribe and get notified.
Also, you call text all the time, 252-327-3357. We love talking to you. Don't be shy. Also, grab our buyer's guide and seller's guide in the description below. Whew. Now I'm dealing with the underwriting fees. Not all loans are going to have underwriting fees, but an underwriting fee is basically, sometimes they just include it all in one in the origination. I had to say the word very slowly, fee, but sometimes lenders break it down into points. So they have the origination fee and then they have the underwriting fee. So this is basically your loan is going to be evaluated by the underwriting. So again, some have a big one number and some break it down into 3. So that is something you have to know. It's going to go through underwriting, which all loans should go through underwriting. What's the next one?
The next one is the credit report fee. Well, how much is that?
It's like $100, $125.
Okay. $100 or $125 credit report fee. That is when they're pulling your credit from the 3 bureaus that we talk about.
Appraisal fee is next. This is going to be between $500 to $1,000 in our area, just depending on how fast it needs to be done. These are third-party companies, third-party people who are going out to tell us the value of the home.
Exactly. The next one, which is not always happening, is a rate lock fee. Mm-hmm. No, which if you wanted to lock.
They did happen a lot last year, but now at this point, people are like, "No, I'm hoping it goes down." But what is it? Lock the rate.
Basically, some of the lender, you can ask some of the lender that they might charge you a fee to lock the interest rate. Let's say if you wanted a 5.5% or 6% and you wanted to lock it, they're gonna charge you a fee to lock that interest rate.
Now, late payment fee, these are going to be actually built into the loans, and it can be based on credit, so that they can, if you have good credit, they're going to give you more time if something does happen to get your before they charge you a fee, and less time if your credit is not so good. So there's just a fee to pay attention to. What's another one?
The next one is the closing costs, which basically is all the cost associated with your home mortgage to finalize basically the mortgage, and might be vary, depends on also, again, your credit score.
So we hope we just ran through some basic mortgage terms that you know, and you feel a little bit more empowered understanding what they are.
And don't forget to call us, Alan Victoria, at 252-327-3357, and share with us your thought. And see you in next podcast and video.